Yes, sir. It's your boy B Hayes. We back with another one, guys. So it's been a crazy market this year. I don't know if it could get any crazier, guys. So as we know, on today, Friday kicks off. We had a nice little momentum at the beginning of the morning, and now things have slowed down, and the market looks to be pulling back once more, guys. It's going to continue to do this. As we know, they trying to sneak certain securities down. In my opinion, they trying to sneak certain securities down to their all-time lows, even though we're expecting for a bullish market within the bearish market once more, which we called before. That could happen a few times, but in the mix of all of this, they is going to mix the market up. What I mean exactly by that, if you've been noticing, the market has been running in sync. Every sector, every area, every category of the market has been going in sync. When the market goes up, everything goes up. Market go down, everything go down. Until a bit recently, where the market started to break up, where we've seen certain stocks taking off way further than others. Some stocks up 20-30%, some up 5-10, and some was actually stagnant. And that's exactly what we about to experience now, guys. Some stocks, as we continue to make lower lows, not all securities have continued to make those lower lows. Only some of them stayed stagnant and stayed near the previous low that it made, and some continue to drop even further, dropping another 20% after being down 70%. Some down over 70%, 60%, dropped another 20-25%. They coming down to actually reach their bottom, and then it's going to leave a lot of people confused, saying like, dang, we waiting on the market to bottom out, and they see certain individual stocks start to soar and they never come back down. And it'll leave you wondering why those stocks never came back down. I thought we were still in the bear market. I thought it was going to come down. Not realizing during the mix up, during this ruckus now, a lot of those securities is going to already be bottomed out. So it's going to leave you confused, and you should already kind of be preparing for this, for what we already been seeing in the market. You know, crazy data coming out, you know, the opposite reaction of what everyone is anticipating and expecting to happen. You know, earnings coming out that's not that bad, but you see a catastrophic drop. So it's just been some weird stuff going on, guys. Let's go and take a further look at what's going on. So the Dow rises 300 points as short-term yields fall on potential for the Fed to slow down rate hikes. So we know by the end of the year, by this year closes out, we could see the Fed's hiking interest rate by another 150 basis points, guys. That's 0.75 percentage points each rate hike. So stocks rose on Friday as investors assess more corporate earnings reports and the outlook for Federal Reserve rate hikes. The Dow Jones gained 343 points. The S&P 500 rose 1%. The NASDAQ was up by 0.5%. So if we go ahead and take a further look at what's going on, guys, we also see that Ken Griffin committed millions to funding Elon Musk's Twitter's deal. So right here, billionaire Ken Griffin has committed to back Elon Musk's bid to buy Twitter. According to a person familiar with the matter, though the amount he pledged was less than $20 million. We know Ken Griffin is worth $29.2 billion. So that's equivalent to 0.01% of his net worth. 20 million is nothing to this man. It's like $2. So anyways, go ahead and take a further look, guys. So they hadn't being disclosed publicly by Musk. Twitter had described the Citadel founder as an actual or potential co-investor in the equity financing for the deal. So Elon Musk has a lot of different partners or people, investors that's coming in with this Twitter deal. Instead of spending the $44 billion himself, he got a lot of different avenues to get investors in. Musk disclosed in a May filing that he had $7.1 billion of financing commitments to help him buy the social media platform, including $1 billion from Larry Ellison, $700 million from Sequoia Capital, and $500 million from Binance. So as we know, guys, that Musk is definitely going to do some phenomenal things with Twitter. In my opinion, he already going to straight out the gate get rid of 75% of the staff. And I did the math of that. If they averagely making $3,000 a month, Musk is going to be able to save $220 million the first year operating. After 4 years of operating Twitter, Musk we already profited $1 billion just off the back end from paying the employees that Twitter was once paying before. So you already know, man, this guy is very strategic with what he's doing. And you already know, guys, pay attention to the market, because I do believe the unexpected and impossible can happen, guys. This will be in a wild year. So you already know what to do. Add your boy on Instagram at the B Hayes Show. Get in VIP. Watch out for WhatsApp spams and all that stuff. I never hit you up first, guys. Ask you for no money or nothing like that. I love you. you. We out, and God bless you. We go.